Good day, Sir Aldred Nico Aguilar. So for today, our group will be presenting our portfolio management proposal. So the company is Apaseri Asset Management Incorporated or AMI, one of the current leading asset management companies in the country, serving multitudes of companies through accumulating, managing, and trading investments with the potential to rise in value over time to increase the client's total wealth. The company is dedicated towards increasing the value of an investment portfolio over time while keeping the risk possibly encountered by businesses at the management level. The company welcomes and wants to serve high net worth individuals, government organizations, enterprises, and institutional investors such as colleges and pension funds. The company's asset managers will be in charge of managing the current assets in the hands of the clients. So for the client, the company has been presented with plans to have an initial investment of 500 million pesos with a risk of profile ranging from moderate to aggressive. Moderate investors desire modest risks that are consummate through income growth. However, because the client is also a will aggressive investor, they may take on much trouble if it means more money. The client likes mid-term to long-term investments, ranging from assets that can be held for 1 to 3 years to investments that can have for 5 years or more. Annual withdrawals would be preferred at a rate of 2 to 3 times with an annual return on investment or ROI of 12 to 15%. The firm will assist the client by recommending asset categories as well as the possible return on investment over the next 5 to 10 years.
Investment account. Before beginning the process, it must be taken in consideration that there was no mention investment account owned by the client. To further pursue the process of investing, one must secure an investment account. If the client has not availed the services of the company's chosen savings account, the asset managers will advise the client to do so. The recommended savings account to be used is Citibank Peso Bonus Saver account, giving the investor a chance to earn bonus interest through saving more money each month. The initial deposit required is 50,000 pesos with the same amount of money needed to retain the interest earned. The base interest is 0.70%, but it could increase up to 1.66% if the client adds 20,000 pesos every month for a year. This allows a total of 240,000 pesos for the savings account to be used by the client for investment purposes. Investment portfolio. To help the client, the company will provide assistance, guidance, and advice regarding decisions concerning the allocation of assets. Asset managers will propose a proper investment portfolio, which is possible collection of future stocks, bonds, mutual funds, and exchange-traded funds. As it will require wise allocation of money and resources, it is highly essential to determine the risk along with the risk tolerance of the client. The risk tolerance was already provided, as it was stated that the client's risk profile is moderate aggressive. The tolerance of the client for the risk determines their functionality once they witness the market highs and lows. It also takes in consideration the age of investor, with the younger ones having more risk tolerance as they still have more years to ride the market. It could be assessed that the more conservative the investor is, the more money is allocated toward bond investments. The opposite is true for investors who are willing to allot more money in stocks, asserting a higher aggressive risk profile. With the client being moderately aggressive in investments, a moderately aggressive investment mix will be advised for the client.
For the investment mix, the portfolio will be filled in with various types of investment. vehicles that could help the investor earn more profit. An investment mix is a combination of investment of an investor. Each investment has taken into consideration the possible risk and the possible amount of return. Based on the figure 1 presented, a total of 65% will be allotted for the stocks, with 50% for local and active stocks that are ranging from mid-term to long-term investments, and 15% in foreign stocks that are most likely in for long-term. Additionally, 20% of the assets will be allotted for the client's bonds, a more stable source of income, and 7% will be used for the client's real estate investment, with the 5% for cash and cash in equities that are, and despite its low income, easy to liquidate and to use. The remaining 3% will be used for petty cash, including the service fee of the company.
Stocks have a greater risk because they are based on the stock market. Meaning, when you buy stocks in a company, you're gonna get shares from them. Now your aim in stocks is to buy them in lower value, then wait for the value to become more expensive so you can sell share in a higher value. Kaya ang ideal na bilhin is undervalued stocks, or stocks na mura pa pero most likely it will become expensive in the future. Now, risky siya kasi nakadepende yung value ng stock sa company. When the company goes down in the market trend, bababa din yung presyo ng stocks nila. Now, if you sell shares that are still low value, malulugi tayo. Pwede rin naman na hindi sila gaano magtaas ang value, so meaning, hindi gaano malaki yung return of investment natin. Stocks are good for aggressive investors because they are willing to take high risks as long as the return of investment is bigger. Since moderate aggressive si client, we will invest 65% for stocks, meaning it has high risk but safer pa rin siyang investment na 40% para hindi siya malugi in case. 50% ng stock ay para sa local stocks, para sa active income kasi kailangan i-monitor natin yung market trends. There will be time that the value is still low. Kailangan masaktuhan natin na pag nasa target price na yung stocks, ibenta natin yung shares natin before bumaba ulit yung value. For the 50%, long-term siya. Because mas stable ang international companies. So bumaba or tumaas man yung presyo, consistent naman na over long periods of time, mataas yung presyo ng stocks. So kapag nag-invest tayo for let's say 5 years, pag nagkaroon ng super low na value ng stocks, pwede muna natin palipasin because we know na tataas pa rin naman over time. So, ibabenta natin yung nabili nating stocks after a few years, then pwede na tayo ulit mag-invest long-term sa ibang companies. The corporations to be mentioned are local companies considered as undervalued stocks. The investments to be used here will be active, with the assets managers constantly checking into see if the investments bought below price has already reached its target price, hence providing the estimated income of the client based on the estimated growth. The client will buy this investment based on their current low price in the market, will hold as the market increases and decreases, and we sell once the target price has been reached. Our first local stocks is SM Prime Holdings. SM Prime Holdings has been one of the major businesses in the Philippines for the previous few years, with the services pioneering to meet the demands of Filipinos. Despite the numerous rivals, SM has created hundreds of branches around the country and is well known by the majority of the population, indicating that it has a low risk of going bankrupt. Given its overall strong record in market trends, the firm continues to provide a wide range of services and is projected to continue to expand in the market. Our next local stock is GT Capital Holdings. The company has continually provided high value with its wide variety of businesses, as seen by its track record in the market. It is now in strong financial shape and is projected to continue to expand its commercial endeavors. They've been regarded as strong worldwide brands, with the majority of their businesses focusing on high-growth items. Its first 3 years on the Philippine Stock Exchange, it shows a growth of 180.49%, providing the same rate of return to its founding investors. It is still included in the inexpensive stocks, therefore buying stocks from them is a good idea. Our third local stock is BDO Unibank Incorporation. Nevertheless, considering its financial difficulty over the last 2 years, the likelihood of bankruptcy has grown dramatically, now standing at 75%. Indeed, investing in a company that is doomed to fail may be a risky proposition. However, the company is presently selling at a significantly lower price than its fair worth. They are now selling stocks at open market pricing that are acceptable to both sellers and buyers. The present position of the bank does not immediately reflect the price of the stocks, which is why BDO remains a viable option. Lastly, for the last local stocks is the Ayala Land Incorporation. For the past few months, Ayala Land has been the less volatile than the most Philippine stocks. As a result, the company's growth potential is significant, despite its weak balance sheet. With its present growth rate, the price is likely to rise dramatically, as it is a prominent firm that is currently undervalued in the market. Although its market price is now high, it is set to become more costly, and the market will continue to be attracted in the long term. Ayala has been around for more than 2 decades, which offers extra security for the client, balancing the danger from the prior firm is stated.
In addition to the local stocks, the client will also invest in big foreign companies. 15% of the budget will be allocated here, specifically Meta Platforms Incorporation and Netflix Incorporation. Meta Platforms Incorporation is a company that specializes in the use of social media technologies. Individuals may interact, find communities, and expand their business via the use of software and apps developed by the corporation. Meta Platform services include advertising, augmented reality, and virtual reality, to name a few examples. As a result of the constructed website Facebook, 1 out of every 3 individuals, or around 13% of the world's population, has been reached. Most of its revenue comes from the advertisement used and featured in its website and applications. This is particularly important because of the tremendous 46% expansion in an already strong advertisement industry. For Netflix, from 7% in 2017 to 20% in 2021. Their company's operating margin has improved over the last 4 years according to generally accepted accounting standards, or GAAP. Because of the competition from other companies like Apple and Disney, Netflix growth has been hampered in the past and continues to do so, despite the fact that the company's growth rate has remained constant. As it begins to focus on games, it expands into a new market and raises the price for both existing and new customers. While the firm has had its shares of high and lows, such as the drop of income in the first month of 2022, the client still sees the company's long-term development as a viable investment opportunity. So for allocating the budget, we're dividing it to Netflix 40% and Meta Platform 60%. In Netflix, we're going to buy 1,729 shares. One share is amounting to $500. That totals to 45,045,290.61 pesos, and 6% of it is our asset. While for Meta Platforms, 1,846 shares will be bought. That is $306.56 per share. That totals to 29,954,684.28 pesos, and 9% of it is our asset. For our estimated 5-year income and profit, Our gross profit for both stocks will be 243,024,557.26 pesos, 167,658,571.61 pesos for the gain in Netflix, and Meta Platforms is 75,365,985.65 pesos.
In bonds, it is safe because yung kumpanya mismo ang mag-provide ng interest. It will happen like this. The company will borrow your money, then the company will give it back with interest. So, malugi man o hindi yung company, di magbabago ibalik sa'yo yung money sa'yo. But the rate of interest ay hindi masyado mataas. Safe siya pero mababa lang din yung balik sa client. For the client, a private investing will be suggested, specifically using a corporate bond. It is almost a certainty that governments will not go bankrupt. Hence, the lower risk in bond investment compared to stocks. 20% will be allotted for the security bank corporate bonds, with an expected interest of 3.125% per annum. Despite the lower risk, a lower return is expected from this sort of investment. This gives the client a safe option and save money in the future in the case of huge losses in the stock market. This is just safely measured. The asset managers will take time to assure that the client will get income from both the bonds and stocks. The asset managers chose the security bank corporate bonds with its higher interest rates compared to the other government bonds available globally. From 100 million investment, the expected return of money after 10 years would be approximately 136 million.
Next that the client will invest in is the real estate properties with 7% on the total budget. With a total of 35 million pesos for the real estate investment, the client will be advised to divide the money and allot it to 3 properties along with some budget for renovation and furnishing fees. 2 properties will be bought around Bonifacio Global City, Taguig, while the remaining property will be bought in Makati. The first unit in BGC will be bought for the price of roughly 15,600,600 pesos, which is a 1-bedroom unit with an area of 65 square meters. The unit is located in Uptown Park Suites. The other unit in the same city will be bought for 8,570,000 pesos. It is located at the 41st floor and is a studio-type unit with an area of 49 square meters. This will be bought in a different condominium, which is in Fort Victoria Condominium. The last unit to be invested in is in San Lorenzo Place, Makati. It is a 2-bedroom and 2-bathroom unit with an area of 48 square meters, almost similar to the previous one in BGC. The unit will be bought for 8,430,000 pesos. The remaining money for the real estate properties will be around 2,400,000 pesos, which is supposed to suffice for additional renovation and interior furnishing fees. 50% or 1,200,000 pesos of all the furnishing fees will be allotted to the 65 square meter unit in BGC, while the other 2 units will have 25% both or 600,000 pesos. The future value is equal to 1 plus the annual growth rate or 3.14% raised to the years that the client is planning to hold the property for 7 years, which will be multiplied to the current value of the property bought. The value of the property will be sum of the price of the property and all the expenditures used and bought to update and improve it. Now, for the table 7, it will show us the income from our real estate properties. For the property in 1-bedroom unit in BGC, the client expect to have 5,030,149.53 pesos or a 31.05% ROI. For the property in studio type in BGC, the income is 2,418,123.28 pesos or 26.37% ROI. And lastly, the 2-bedroom unit in Makati, total of income is 2,381,205.37 pesos and also at 27.37% ROI. The total income from all the three property is 9,829,478.18 pesos or 28.08 ROI.
And for petty cash is a tiny sum of money that can be used to pay for legal expenses that don't warrant writing a check or using a credit card. Petty cash is useful for small transactions where writing a check or a business credit card would be inconvenient and impossible. Each department in a larger firm may have its own petty cash fund. Office supplies, customers' cards, flowers, paying for a catered lunch for staff, and reimbursing employees for expenditures can all be paid for with a petty cash fund. The key advantage of petty cash is that it is quick, convenient, and simple to grasp and utilize. The remaining assets with 15 million will be used for petty cash, which includes the payment for the assets managers and the asset company, with 300,000 or 2% of the petty cash annually.